Good afternoon, everybody, and welcome back to Series 8 of the Climate Pioneers Show. If you are a regular listener of ours, you will know that every series we focus on a different topic, and there is no better way to kick off 2025 than by interviewing experts from some of the UK's leading climate investors. I will be asking them for their reflections on 2024, what their predictions are for the market in 2025 and what technologies they're most excited about investing in. And crucially, I will be asking what advice they would give to founders looking to raise investment this year. And today, for episode number 7, I am joined by Kate Ronayne, investor at BGF Ventures. BGF is the most active investor in the small and mid-sized businesses of the UK. They have a fund of 2.5 billion to support early stage and growth stage businesses across a variety of sectors. And Kate joined them in September last year, bringing her knowledge from over 6 years of investing in early stage deep tech climate solutions. Kate, thank you so much for joining me.
Thank you very much, Sherry. Really, really nice to get the opportunity to chat to you again.
Yeah, absolutely, because this is not your first rodeo, is it? We spoke a couple of years ago. So thank you so much for coming back. So I've given a bit of intro there to yourself, your background and to BGF, but are you happy to sort of expand upon that and tell us a little bit more about BGF as a fund, who they invest in, at what stages, and a bit more about the thesis?
Yeah, so thanks for that, Sherry. So you've done actually a really good job of introducing BGF. So I'll focus down on the part of the fund that I'm involved with, which is our early stage team. So we are very much a deep tech venture investor. We invest across 3 themes broadly. So climate, deep tech, and life sciences. And those are all very nice broad buckets that allows us to really look at a very wide variety of businesses doing lots of different things. My interest is very much on the climate and deep tech side. And we tend to invest at Series A, which is an interesting label because I think these labels are increasingly meaningless. But what we're looking for really for us to get involved in a company is, so usually not straight out of, say, university. It's a little bit more mature than that. We would like to see technologies that are a little bit more proven. So going beyond, next step beyond a lab demo, and with some customer engagement. So really want to see some early evidence of traction from the market that people are really interested in your solution. So in contrast to perhaps some other earlier stage investors who are investing in companies where they are still have a wide range of markets that they could be going after, we tend to get involved when people are quite know who those first customers are likely to be and why they're likely to buy. So if it's helpful, the sort of check size that sort of translates into for us is anything from sort of 3 to 8 million. So I would say 3 to 4 million is quite a typical first check from us. So it gives helps to orient where we get involved.
Okay, fantastic. And how did you find 2024 to be in the sort of climate investing landscape? And what did you kind of perceive to be the trends throughout that time, and how buoyant a market did you find it to be, or not?
I think it was quite an interesting year. So obviously there's still a little bit of a feeling of we've passed a peak back in 2021, early 22, when there was an awful lot of excitement, an awful lot of money. I think the bar has got a lot higher for companies now. I think both in terms of the proposition, the stage, and I think people are looking for much stronger buy signals on the customer side. Right. And that's not just new investments, but also when our companies are looking for follow-on funding. There's a real, I would say, a much stronger driver to see signed contracts or offtake agreements, or depending on the industry, everyone really wants to see that customer pull, because I would say there's a bit more skepticism, to be honest, around some of the business models that people were trying to pursue in this area.
Yeah, and it feels to me like, specifically for hardware-based solutions and deep tech, that there has been more of an interest focused on those sorts of solutions over the last year to 18 months than there had been maybe previously, when a lot of the focus had been more on sort of asset-light digital sort of software-based solutions. And it feels like more investors are building an appetite for investing in hardware and deep tech solutions. A lot more talk around first of a kind, I noticed last year. Did you notice a similar sort of shift in that direction? And yeah, what are your thoughts on that?
Yeah, I'm not sure if so I've always believed that hardware is that you can't solve all the problems we face with software alone, that you have to have hardware solutions. And so I've always wondered if I'm just in a bubble of people saying that, because the sort of co-investors that we would work with are also very firm believers in that. But I think you're right. And I also think a lot of the problems that you can solve with software in this industry, not all, but quite a lot of them have now been solved. There's an awful lot of efficiencies to be had by implementing technologies, software and AI technologies from other industries to address some of the climate challenges. However, that only gets you so far. I think you're right that the market is waking up to that. And you're right, there's an awful lot of talk around what that means in terms of financing, because the financing journey is longer and harder. And with one of the big challenges with hardware is obviously the cost and the time for any iteration is much greater. So the sort of move fast and break things type approach is a lot harder to do on the hardware side. So it's kind of an interesting change in the dynamic.
Yeah, absolutely. And in terms of companies within the portfolio that fared particularly well last year, I appreciate you joined BGF towards the end of last year. So I don't know if you could speak to any climate companies that were already in the portfolio, but have you got companies in your portfolio that are performing particularly well in the somewhat challenging conditions that we've had in the last year? And if so, what are the themes there, and why do you think they are performing particularly well?
I mean, yes, because everybody likes to talk about the good news, right? So you do hear those stories, even if you're quite recent to the fund. So we've got a couple of we've got a number of really exciting companies, but we've got a few that in the last year actually passed some really significant milestones. So there's a battery technology we've invested in, Ekion, who produce a novel anode material, which allows much faster long lifetime, but with very high energy density and fast charging. So you can start to electrify other mobility rather than just say automotive, but more heavy duty transport. So they've had an amazing year. They've built a manufacturing plant with CBMM, who are the global leader in niobium. They've also brought a product to market, which I think is a really interesting thing for companies who are part of a solution. So they've got an anode, but obviously an anode on its own isn't much good to people. They need a battery. In fact, they need a battery pack usually. So, how they've managed to navigate the supply chain, work with partners. They've brought that first product is with a Swiss company. So they've actually now got products in the market that are looking at mobility applications in rail and in off-road technology. So that's really exciting to see and really encouraging to see how they can kind of come in and disrupt those very well-established supply chains.
Yeah.
But I would say for the companies who've had a really good year, the common theme is usually that a lot of the climate advantages that they offer are around much better performance and at lower cost. And that combination of it takes less energy if you use our solution, and therefore it's much better in terms of emissions. But also the CFO can see actually there's a big OPEX CapEx saving to be had. Those seem to be the companies that I would say are really taking off.
Yeah, the ones that aren't relying on any form of a green premium, but actually, where sustainability is almost a byproduct of something that makes something better, quicker, cheaper.
Yeah, and I think the green premium days, I mean, it feels to me like those are gone. And in terms of businesses that we'd be looking to invest in, or indeed businesses in the portfolio, I think if you're relying on the idea that customers will pay more because it's green, whether that's consumer or B2B, that just feels like that's not really that's not a very solid foundation to build a business on, particularly in an era where lots of the incentives are changing and it's not clear how those are going to play out in future.
Yeah, I suppose the only world in which that could work is one where there's sufficient regulatory pressure that they have to adopt your solution. But yeah, you're absolutely right.
Yeah.
And in terms of sort of the market for this year, and I appreciate it's still very early days, but what are you seeing already in terms of signals for 2025 as to how you feel the market for climate investment is likely to pay out?
So I think that point around lack of green premium is definitely going to be another theme in 2025. We're going to increasingly see that businesses are going to have to adapt to think about, well, how can we do this differently if we can no longer charge extra? So I think there'll be a little bit of business model evolution there, which is quite exciting. Actually, puts the businesses on a more sustainable footing. I think we're starting, I would say, towards the end of last year, and possibly from sort of summer, but very much post-election in the US, there seemed to be quite a lot of hesitancy. People wanted to wait and see what does the Trump administration mean, of all of the things that they've said that they're going to do, which ones will they actually do? I mean, we're still on that learning curve, and particularly for projects where there was, a big incentive through perhaps some IRA funding. Actually, how that plays out has been, I think that's just stopped a lot of people from acting, even if they didn't directly have, even if it wasn't a sort of a specific project being put on hold. I think people were just a bit like, well, do we need to do this today? Let's wait and see. So I think as that clarifies and as we start to see how the rest of the world reacts to it, I think that's also, I feel like we're starting to kind of emerge from that sort of stasis is hopefully moving on, because that's quite, indecision is just really unhelpful.
Yeah, well, we notice that incredibly acutely in the recruitment space, that whenever there's any form of indecision, either on a local, national level or on a sort of global macroeconomic, geopolitical level, everybody just stops for a minute to see how this is going to play out before they make any decisions, and hiring often being one of those. Interesting. I'd love to hear your thoughts on, obviously none of us know what is actually going to happen with the new administration and what decisions, there's a lot said, but we don't know what will actually turn into action. Could the implications of that, however, have sort of positive ramifications for the UK and Europe, where people or companies that were thinking about expanding into the US perhaps don't, or people look at sort of expanding in Europe more so, seeing it as being a more favourable economy in which to build?
Yeah, I mean, like all of these things, there's always massive opportunity, where these changes happen. I think there's an interesting question really for the EU and for individual governments in Europe as well, as to actually, do they want to take a lead? Where have they got national strengths and national capabilities that they could build on? Because there is now an opportunity, I think, for people. We seem to have moved away from that sort of massive globalization. I think that sort of reshoring of supply chains is going to continue. I think people are interested, which has really interesting climate implications if everything isn't constantly being shipped back and forth. And so I think there's quite a lot of interesting opportunity around that. Actually, what will companies want to, multinational companies, how will they think about shrinking supply chains, maybe localizing some of the capabilities? And I think particularly for those for people offering a really new way of doing stuff. So one of the big challenges, I think one of the most exciting and interesting things, frankly, is if you've got a very well-established industry, but you've got something that's disruptive, and you've proven it out at a small scale, but it's the intermediate steps to get to how everybody's doing it now. So I don't know, for example, in ammonia, which is not an area we've invested in, but there's a lot of ammonia made at hundreds of tons a day kind of scale. To scale up something from a lab to that sort of to take something from a lab process to that scale, it's just an enormous risk profile. Why would anyone ever do that? Because the existing works well, and you might get savings, but will you actually? So I think as people look at reshoring, there's an opportunity to do stuff at medium scale. So it offers a way to break down that massive chasm of, well, we can prove we can do it at a ton, to how do we get to 100 tons? Well, actually, there might be something that that somebody wants to do at 5 tons or 10 tons, because that's localized to another facility. You're kind of part of that supply chain. So I think there's a lot of, and I mean, companies are seeing this, and some of the more interesting business plans that we're seeing coming through, often they're kind of looking at that sort of, well, as things change and people want to do stuff more locally, things that haven't been done in Europe for years are now, maybe there's opportunity there. So that's quite interesting. And I guess at a government level, you kind of have to start thinking about, well, how do you help that? How do you incentivize it? And how might you retain it in longer term? Because there is we still want to be creating the jobs of the future. Actually, there's lots of ways we could do that while also reducing carbon footprints.
Yeah, and I think we still have a little way to go on supporting businesses through that growth journey, as we've seen with Northvolt last year and various other, organisations of a similar nature that weren't able to be supported through that growth journey.
Yeah, and it's really hard, because I think you want to move away from some really high profile standalone companies that then, if they fail, that it feels like the whole market, the UK or Europe's just not the place to do this. And you think, well, there could be lots of reasons, but because they're sort of one of one, actually that success or failure has a huge ripple effect right the way down through the market. So how do you create, more so that the failure of one doesn't then sort of rule out a battery company in the UK for decades afterwards?
Absolutely. Yeah, you're right. And leads me on to a whole other subject about our attitude to failure. But save that for another day, because that's a whole rabbit warren. So in terms of technology that you're particularly excited about for this year, within that climate and deep tech space specifically, what are the topics, the subsectors, the types of technology that you're particularly got an eye on in 2025?
Well, I love anything that's chemistry, partly because that's my background. That's the science I did a long time ago. But also because I think there's actually an awful lot of scope to disrupt in that market. I think there's lots of very long established materials that we use in supply chains for those that actually have been done the same way for hundreds and hundreds of years. These things refer back to papers written in German in the 1800s. There's so much technology there. I think actually there's some really exciting gains to be had. And as I say, as the environment changes, it might actually surprisingly make it easier for some of those to come through. Energy efficiency is going to be a massive theme as well. So we see it in the portfolio in terms of some of the existing companies. So, anyone who's playing into data centers and electronics, as our appetite is increasing in terms of the compute that we want to use, the capabilities that those need to deliver, so is the energy consumption. So I think there's quite a lot of scope there again to do things more efficiently, to do things faster. And that sort of then, obviously plays into massive investment that we're seeing elsewhere in some of these big, large language models as well. So not AI foundational models, but actually the hardware to make those run more efficiently and therefore with a much lower carbon footprint.
Yeah, the challenge of making those sustainable is going to be a really interesting one to watch play out, right? Over the next couple of decades, I guess.
I think seeing things like DeepSeek and how the markets react to that, I think that's really fascinating. I would argue maybe there's some massive overreaction.
There always is.
but I think it goes to show that it's something that everybody feels actually that's that is the direction that we're all headed. So how can we do that in a safer, better way?
Yeah, it'll be really interesting because it feels like I think anything related to AI and climate always feels like such a 1 step forward, 2 steps back situation, right? Yes, we've made something more efficient, but the energy, we're going to use more of it now because it's more efficient. So 2 steps back. So it'll be interesting to see how that plays out.
I mean, a slightly, the desire to replace call centers with chatbots, which I have to say, I don't know about you, but sometimes you just really want to talk to a person, and you really feel that that's what you need. But the reason that switch hasn't happened is because actually it is cheaper to employ people, because the chatbots are so energy intensive. And I think, well, that's probably there is a positive in there, but also I mean, one of the things about DeepSeek that was so exciting, I think, was that they were claiming 1/40 of the energy consumption of ChatGPT. So I think it can show you just how that market can move, and how we can use these things better as well. How can we be more effective, and use them to help us find solutions rather than replace the ability to talk to a person.
Exactly that. I'm a big believer of any AI solution that elevates the human rather than replaces the human. And I think ultimately that's the way we'll go. And maybe I'm a naive optimist and a bit of a AI naysayer, but I don't think it's going to replace human interaction. I think if anything, it'll make us crave it more. And we've only got to look at the fact that vinyl sales are growing at a faster rate than they have for decades to see that just because we digitize something doesn't mean we make it better. It doesn't mean it's what people want. I still read a paperback. So there you go. So I think we'll come full circle slightly on that. But And in terms of when you go to make an investment, what does an investable prospect look like for you? And you mentioned earlier on in our conversation about, evidence of commercial traction and like tangible evidence of commercial traction, and a technology maturity that means it's out of the lab and kind of, in the real world, in a sense, either at pilot stage or beyond. But what else is important to you when making investments? What do you look for in the team and in the organization more broadly?
Yeah, I was trying to think of a better way to answer this, Cherry, than to give you the generic VC answer of, tech team market, because we always say this, like you ask any investor and they will give you the exact same answer.
Yeah.
And I guess it's partly trying to explain what we mean in any of those. So, in terms of technology, yes, absolutely, it has to have some really it has to have an unfair advantage in the market you're trying to address. That sounds really obvious. Quite often people have patented things that are not core to the solution they're trying to deliver. It doesn't necessarily have to be a patent. There are other ways to protect intellectual property, but typically it's a patent. And that technology there has to be a sort of a depth to it. I mean, deep tech, but ideally your technology, what I really like is if there's a fundamental physics reason why the way that people are doing it today can't compete in terms of cost efficiency, whatever the metric is, with what you're doing. So that's the sort of tech advantage that we tend to look for. And that traction piece can look like lots of different things, but it is really somebody somewhere is going to pay you money. Maybe they've already paid you money. Great. Maybe they're going to pay you money if you manage to do X, Y, and Z. Or maybe there's just an awful lot of people you can point to with that problem who are willing to say, if somebody had a good solution, we would pay. So that's kind of, I suppose, maybe one of the ways to think about traction. And then the team is a really, really interesting question, actually. I think an awful lot of the companies that in our early stage portfolio, we've backed a lot of first-time founders. We've backed an awful lot of first-time founders, actually. So, one of the things that I think is always really interesting is who has the founder got around them. And it might be that it's people that they've worked with before in, whatever guise that might be. Sometimes it's people who did their PhDs or postdoc together. Sometimes it's people who worked in a different company together. So, you know, what are the complementary skills that they're bringing to solving problems? And also, who have they brought in? You know, we made an investment last year in an Oxford spin-out, where one of the things that really impressed me was the quality of the advisors and chair that the founder had managed to attract. So, you know, it was, I would say, at the early end of where we typically invest, but the founder had impressed people with such strong industry experience that you kind of think, gosh, you know, if these guys really like it as well, it's such a big tick, you know, and in and of itself, it doesn't, the way that I think all VCs make decisions, I mean, there are some things that are sort of yes, no, in, out, but an awful lot of it is when you kind of weigh up the different aspects, it comes down to, on balance, yes, I think this makes sense, or on balance, yeah, you know, there's that thing that I don't quite, it's not quite enough traction, or actually, I'm not sure the market's quite as big as they believe, or we think we might need to replace a couple of people. So it's rarely a really stark yes or no. It tends to be that kind of on balance. And one of the things that can really weight that, I think, is the team, the quality of the individuals, how they work together. And, you know, you're just assessing when things go wrong, or maybe just don't play out the way that the plan says. How are they going to react to those situations? How do I think this group of people are going to be able to execute if on what they want to do if it changes? So it's kind of trying to predict how do I think they'll behave under pressure is a big part of what I think everybody looks for in teams, and it's really subjective.
And it's interesting, how do you assess that? How do you assess how resilient they will be? Do you interview them, or?
Yeah, I mean, we tend to try and spend quite a bit of time. So as part of any due diligence process, you do spend quite a lot of time talking to people. I think for me, I've realized that it's quite a strong decision-making factor for me. So I want to try and go and, you know, this new world is great where you can do everything online, but actually there's something about going and meeting a company, seeing where they are, just feeling that culture that you can't get through talking to the CEO on screen. So yes, some of it is it's just sort of time spent. I mean, sometimes we do some formal processes around that, and maybe get our talent network team involved. But a lot of it is, you know, trying to understand the experience that people have had, not just work, but, you know, trying to get to know the people behind the companies, and talking to them individually and separately, and, you know, asking them about how they might cope if certain things happen. And, you know, funding rounds often throw up lots of unexpected things. So, you know, how do they react to that?
I suppose ultimately you are seeing them in one of the tougher times, right, which is going through a fundraise. So you are sort of seeing them at a point at which they are being tested and pushed and challenged. So yeah, and, you know, it's really interesting, because some people, you know, when you do kind of push and say, well, what about this, or if something happens, how they respond to it. Some people are fantastically well prepared and have like lots of scenarios, and other people are just really good at sort of adapting in the moment. And I think you need kind of all of those skills in a team. And yeah, it is. I mean, fundraising is quite a brutal process, actually. I have an awful lot of sympathy for the people on the other end of it. Yeah, absolutely. And so, in terms of advice for founders that are about to embark upon this, what if they're wanting to approach BGF, for example, what would you expect for them to have prepared prior to coming and making an approach to you? And what advice would you give to founders that are about to embark upon this process in terms of how they get ready?
Yeah, I mean, I definitely think talk to people, or is the best time to talk to people is when you don't need their money. So not always possible, but I really like talking to people when they've just closed a round.
Yeah, okay.
Because it's a bit like if you've just done an exam in something, right? You're on the top of your game. You're deep in explaining your strategy to people who aren't expert. You've kind of honed your message and the narrative and how you're going to tell a story. And it's a very low pressure interaction, because we're just talking about your business, and show me the CEO who doesn't want to talk for hours about their business.
Yeah.
So try and talk to people before you are actually raising. And certainly for us, we're always very happy to talk to people who are we're very happy to talk to people who are raising, but we're also happy to talk to people who are, I kind of want to build some relationships for my Series A in 18 months time. So that's really great. Make sure that you're going to deliver whatever you tell that investor that you are going to deliver, because if they really like you, they'll go in, write down what you said your milestones were, and when you phone them up, they will ask you. So just a word of warning on that. I think if you are raising, it's about really quickly trying to establish if there's going to be a fit before you invest a lot of time in talking to me, or I invest a lot of time in diligencing what you're doing. So it's really like, how do you get to, is there a fit quite quickly in a conversation? And that's so to make sure that I mean, if you can know it in advance and rule it out, that's fine. But talk about check sizes, talk about the likely exit. If you want to sell your business in 3 years for, I don't know, 50 million, then we're probably not going to be the right investor for you, because for us, the minority stake we take, it doesn't make economic sense. So I think really try and understand which investors fit your plan and ambition as early as you can. And silly things like, we invest in businesses in the UK and Ireland. So if it doesn't matter how good your business in Holland is, it's outside my investment remit. So there is, I think understanding all of that really helps in those conversations, because they do take a lot of time. I mean, it's yeah.
Like streamlining that focus before you even get started, or in the early days of those conversations, and then starting conversations before you need to have them, and then building a relationship over time.
Yeah, and then ask, well, what would you want to see for this to be investable? Because we'll tell you that, all investors will tell you. The people will be very clear about if they've got, say, a minimum revenue that they need to see, or if they've got I don't know, a TRL level that they like to come in at. So asking the question, and always ask investors if they've actually got funds to deploy. You can waste a lot of time talking to people who, for whatever reason, might not be in a position to back your business on the timescale that you're hoping to raise funds.
Yes, good point. Yeah, absolutely. And how can people get in touch with you if they're interested in approaching you and BGF?
Well, I happen to have a very easy to find surname, so I'm quite easy to find on LinkedIn, or email me. I'm super old fashioned, so those are probably the two best channels. And I will try and I may not always get back to people very quickly, but I will try and respond, and particularly try and give people a quick no, because I think it's not always very nice, but it can be really valuable in, and you're not investing time in something that's where there isn't a fit.
It's kind to be clear, as they say. Yeah.
Yes.
Excellent. Okay, thank you so much for your time today. Thank you for sharing your insights, your predictions on the market, and your advice to founders. There'll be people out there listening that I'm sure will have found that incredibly valuable. So thank you so much for your time.